Hi everyone. Today, I will show you guys how to read a stock quote on Yahoo Finance. This video will help you guys become a better person while doing the financial management final project. Also, we are trying to answer the question, what do we look at while picking a stock based on some of my experience on the market? Well, as an investor, there are many ways for us to invest in a company, but in terms of analysis, there are always two types. It's either technical or fundamental. Technical analysis is more about working with the chart. We decide whether there is a pattern. So through the pattern, we know that whether the market will going up or going down. Therefore, technical analysis is appropriate for short-term investor. Meanwhile, fundamental analysis is more about working with the number, with what the company actually make in terms of money. We also look at the quality of the companies, including the leadership, the rumor, and so on. We also take a look at the macroeconomic environment. For example, if the US government have some kind of policy against the interest rate, what's going to happen to the stock price of a company which is based in the US? So fundamental analysis will help us to answer this question. In terms of myself, I put myself anywhere around this area, which is just in the middle of this bar. So I'm kind of biased into the fundamental analysis side, which indicate that I'm a long-term investor. But I do sometimes look at the chart of the technical side in order to identify some good opportunity to enter the market. So what is the key to make the most out of your money? Please notice that the phrase that I'm using here is the most out of your money instead of how to make the most money. They are two totally different concepts. There is a saying, the fear of loss is greater than the joy of winning. This saying just want to indicate that most people are afraid to lose more than enjoy winning. Let's take a look at the first scenario. Let's say that the amount of water inside the cup is the money that you have currently. And the cup represents a company which is called Company A. One day, Company A will go bankrupt. So what will happen to your money? Exactly, you lose all of the money. So you go broke just after one night. However, the second scenario indicates that there are different companies here. A, B, C, D, E, F, G, H. 8 companies. And with the same amount of money. So this time, instead of putting all of your money into Company A, you decide to spread it around to different companies. And the same thing happened one day in the future. Company A will go bankrupt. You lose all of the money you put in Company A. But thanks to the fact that you already put the rest of the money somewhere else, that's why even though you did make a loss, but at the same time, you also make profit. And you still have a good financial health in general. So what I'm trying to tell you guys that the key to make the most out of your money is to diversify. Diversify your portfolio. That's how you build sustainable wealth. Alright, let's get our hands dirty. First, fundamental analysis. So in fundamental analysis, there are two parts, quantitative and qualitative. Quantitative is about working with this number below. And here, I choose a stock from Apple company, which is indeed one of the most famous, one of the biggest tech giants around this world in charge of producing products, for example, the iPhone, the iPad. We all are using it. So after getting access to the Yahoo Finance website, there will be a summary screen pop-up which look like this. And here there are some numbers which I will help you guys to understand. The first thing is previous close. Previous close is the last price of the trading day. So when the market closed, the stock has a price of $218.36. How about open? Well, it's the reverse thing. So when the market opened on the trading days, it has the price of $219.15. The next number I want to look at is the market cap. So market cap is market capitalization, which indicate the market value of this company. The formula is very easy. It's the total number of shares outstanding times the stock price. This will be the market value of the company. For example, here Apple has a market value of $3.34 trillion. How about beta? So beta is a kind of number which indicates whether this company is risky or not risky. A good beta is often 1. Below 1 indicate that this company doesn't take risks at all. And in the world of chaos, if you don't take risks, how can you make great money? Why a beta greater than 1 indicate that this company is relatively risky. For Apple, they have a beta of 1.24, which means it's pretty close to 1. An investor could still enjoy the risk of making money, but can also make sure that they're not going to lose a lot of money. The next number is P/E ratio. P/E ratio stands for price over earning. And price over earning indicates that how much money an investor willing to spend with $1 of earning that Apple make. For example, here, with every $1 that Apple makes, an investor willing to spend $33.46 to buy the shares. The next number is earning per share, and the formula is total earning divided by total of shares. So this number tells us that with each shares, how much earning do we make? This stock also pay dividend, and the expected dividend is $1, which yield a dividend yield of 0.45%. And it is expected to pay dividend to all investors on 12 August 2024, which is 8 days above today. This is an example of the pop-up screen. So we're currently on the summary website, and the next step of quantitative analysis is to analyze the financial side. So we just need to press financials. It will move us to another site. Here we have income statement, balance sheet, and cash flow. So the first step is to analyze the balance sheet. Well, obviously there are numbers here. There are many numbers here, but I often take a look at two main numbers, which is the current asset and the current liabilities. Why? Because I want to calculate the current ratio. And the current ratio measures a company's capacity to pay its short-term liabilities due in 1 year. The formula is to take the current asset divided by the current liabilities. This gives us an answer of around 1.03. Normally, in real life, a good current ratio is anywhere between 1.5 to 3. Why this company, Apple company, has 1.03, which may raise some concern for me as an investor. Moving on next, we have the income statement. For income statement, again, we have a lot of number, but I only capture the main part where I usually take a look at. For me, I will look at two numbers, which are the total revenue and the operating income. The formula I use here is operating income divided by total revenue and times with 100. And I will look for a number which is around 15. For Apple company, the result is 31, which is way above 15. So Apple stock really meets my criteria more than 15. So I may invest in this stock. Next, we have cash flow statement. For cash flow statement, I only look at free cash flow. And for free cash flow, I want to know whether the company has the ability, cash on hand, to be able to pay all of the company's bill and cost for a month. And therefore, I will have more insight should I invest into this company or not. Therefore, the ratio I'm using here is free cash flow divided by total revenue times 100. For this company, I can calculate 26. Remember, I get the total revenue from the income statement. Here, $281.623 billion. Normally, a good ratio is from 20 to 25. And 26 is really close to this range. So Apple stock could be a great choice for me to diversify my portfolio. Next step is qualitative analysis. And people often look at three factors: the brand recognition, the news, the rumors, and finally the leaders. Factor 1 is brand recognition, whether the brand is easily to recognize, whether the brand is famous. When we talk about a product, do we know where it's come from? A good brand recognition will make sure that the company will keep making revenue by selling their products in the future, because their brand is trusted by billions of people, millions of people around the world. The second factor is the news, the rumors. Every rumors will have a good effect or a bad effect on the stock price. For example, here we have a rumor which is Berkshire Hathaway, which is a very big fund by the legendary investor Warren Buffett, slashes Apple stock by nearly 50%. So if a very famous investor like Warren Buffett decides to sell almost 50% of his stake in company, which means individual investor like us, we may think that there got to be something bad about the company. That's why a legendary investor like Warren Buffett willing to sell that much of stock. And the third factor is the leader. Well, currently we have Mr. Timothy Cook as the CEO, and he's appeared to be a very great guy, very good leader. But imagine tomorrow morning when you guys wake up and there's a news where they say that Timothy Cook stepped down and they will replace Timothy Cook with Andy, who is me, the instructor of this course. Do you think that I can lead the company better than Timothy Cook? It's a question we're not going to pursue any further, but we surely know that the price will go down, because I think that Timothy Cook is a much more trustworthy person than me currently. So this is about qualitative analysis. A candlestick has two main parts. The first part is the body, which is the thick part of the candlestick represents the range between the open and the close price. So it's here to here. This one is the body part. Then we have the wick. The wick are the thin lines extending above and below the body. The upper wicks is the line that extend from the top of the body to the high price. And the lower wick extend from the bottom of the body to the low price. Wick, upper wick and lower wick. So how do we interpret this candlestick? So obviously there are two colors, red and green. The one on the left is called a bearish candlestick. It illustrates that there is a downtrend in the market. The market is going down. And according to definition, a bearish candlestick is a candlestick where the close price is lower than the open price. It suggests selling pressure. And the one on the right is called the bullish candlestick. A bullish candlestick. Just a reminder, the red one is a bearish candlestick. So bullish candlestick is where the close price is higher than the open price, and it suggests a buying pressure, which means a green color represents an uptrend. The market is going up. So this is the end of our video today. Thank you guys for listening. Hopefully after this video, you guys will get to know more about the stock market, what kind of stock should we pick, and hopefully you guys will be successful on your final project of the financial management course. Thank you very much.